Hi, I'm Bill Borton, and this is Live Better Longer. I'm here today with my guest, Richard Fullmer, who is the Chief Actuarial and Investment Strategist for TontineTrust, which is a Gibraltar-based startup. Richard has joined me today from Baltimore, Maryland, to be on the show to talk about Tontines and TontineTrust. Richard, welcome.
Thank you. It's a pleasure.
Yes, great. So, Richard, tontine is a word that few people in this country are familiar with, yet tontines have been around one way or another for hundreds of years. Kind of give me some background, would you please?
Sure. Let me paint a picture for you of what a tontine is, and then I'll expand a little bit more to talk about generally what else it can be. If we think about a group of people that get together and invest their money, say in a bond, for example, and it could be any number of people, but let's say there's 20 people that invest in a bond together, and they make a pact and say that the bond is going to be giving us interest over time, and for as long as each of us are alive, we're going to share in the interest on the bond.
Mm-hmm.
Okay. Now, when someone dies, they no longer get a share of that interest from the bond. So the survivors then split the interest among themselves, so that as each person successively dies, the rest of the survivors get a bigger share of the income.
Mm-hmm.
So eventually, the last person gets all of the income coming from the bond.
Okay.
And so one of the powerful things about this idea is that a tontine can deliver lifetime income.
Mm-hmm.
So
Kind
you're
of
going to keep
like an
getting
annuity,
income
right?
as long as you live, just like an annuity in that respect. Yes.
Right.
So you mentioned tontines have been around for a long time, but people don't really perhaps know that they exist. And one of the reasons for that is that although tontines were invented in 1653 in France by a gentleman named Lorenzo de Tonti, it was primarily as a vehicle for funding wars. So
Mm-hmm.
France is at war, they need to raise a lot of money, and they're trying to figure out how do they do that. Well, one way they can do so is by offering what we now know as tontines to the public, and the public invest in these things. The government says, we will give you interest for as long as you live, right? And then once you die, the interest stops for you, but all the survivors then get your share of the interest. So
Mm-hmm.
it's a similar thing. So you can invest this, it's going to give you lifetime income. The longer you live, the more that you get.
Mm-hmm.
Right? So it was a bit of a lottery type of structure to this.
So then tontines then became popular again, what, in the late 1800s in this country?
That's right. They were very popular, in fact, even though we don't hear much about them today. But
Mm-hmm.
in the 1800s, they were very popular, and millions of dollars were invested in these products. And the reason primarily was because the financial services industry figured out that you don't really have to have a lottery aspect to this. So some people might be interested in buying a lottery, right? So lotteries are popular, but you can design a tontine that is not lottery-like, that has a higher level of payouts earlier, and has an expectation that as you continue surviving over time, even if you live to a very long time, that the payouts will be relatively flat over
Mm-hmm.
time. Right? So instead of you getting more and more and more bigger share of the income, everyone shares more fairly in terms of.
Well, people like predictability too.
That's right.
So
Right.
when I'm talking to people about retirement income planning, obviously when you get past Social Security, and for those people who are fortunate enough to have a pension or a defined benefit plan, really at this point in time, some type of an income annuity is really the only other way that you can guarantee lifetime income. However, a tontine, should they come back into vogue, is potentially a way that you could have guaranteed lifetime income and have the income increase, correct?
That's true. Now, one thing that we have to recall with a tontine is that the difference between a tontine and an annuity primarily is that the tontine doesn't come backed by a guarantee.
Mm-hmm.
Right? So we wouldn't say it's a guaranteed lifetime income, but we can say it's like a secure lifetime income. So think about this in terms of the example I gave earlier, right? So the person who lives the longest is going to get income for the rest of his or her life, right? So in fact, all the members of the Tontine that I described get income for the rest of their life. Some live shorter amount of time, some live longer amount of time, but they all get income for the rest of their life. So Tontines are designed to do that without using an insurance company to provide a financial backing of a guarantee, because a guarantee really isn't needed if people just get together and share the longevity risk among themselves.
Sure. So when you are looking at this kind of a pooled arrangement without the insurance company, you're also saving on a lot of other things like expenses and sales commissions and things along those lines too.
That's right.
So the return on a Tontine could be what, 30, 40% higher?
Yes, that's right. It probably depends on where geographically we're talking, right? Because the pricing of annuities is different in the U.S. than it is in some European countries, right? So, but often there's research that shows an annuity's cost is essentially at least 15 to 20% higher than is what's called actuarially fair. So insurance company has to, right? Because they're providing a guarantee. They have to charge for that guarantee. They're taking risk, right? So by providing the guarantee, they're taking risk. They have to charge for it. So they have to create reserves. They have to do all kind of processing to ensure that the reserves are invested properly. And
Yeah, they're heavily regulated, so they don't really have an option. They have to maintain these reserves.
That's right. And for people like me that study this kind of thing, we know that guarantees are expensive. So it's not perhaps if the insurance company wants to charge someone a lot of money, but they have to charge enough money to guarantee that they're going to be around to pay their claims, right? So with the Tontine, you dispense with that. And particularly in certain countries in Europe, the extra amount that you can expect from a Tontine is significantly more than it is in an annuity. And similarly, you're going to find the same thing in the U.S., but in certain European countries, it's even more. So as you say, you might get 30 or 40% more income out of a Tontine than you would in an annuity.
So what happened in this country? It was over 100 years ago, I guess, that the Tontines kind of fell out of favor and pretty much disappeared. What happened?
Right. So, someone watching our program might be thinking, if Tontines are so great, what happened? Right? So, unfortunately, the financial services industry wasn't as mature and regulated then as it is now, right? So we had Tontine providers that were selling a lot of this because it's a very popular product. And unfortunately, there were some that were bad actors and using fraudulent practices. And people were expecting, say, a lifetime income and then finding out that no, they don't actually get what was promised to them. And the way the regulators dealt with this, because it was obviously a big concern, the way the regulators dealt with it was that they just said, you know what, we're just not going to allow these products. If you want to if you want a lifetime income, you're going to have to buy it through an insurance company who's going to provide you a guarantee. And we're going to regulate the insurance company to say, make sure they put aside the proper amount of reserves. They're going to invest conservatively and all the things that you think about with an annuity today, which is very beneficial, right?
Oh,
I like the idea of a guaranteed lifetime income.
Yeah, so consumers got guarantees, but at a steep cost.
At a very steep cost and unfortunate. So now, looking back on that period of time today, we think about we have a very mature industry now, right? So we've got people investing in investment products of all kinds, mutual funds, exchange-traded funds, and we don't have this issue of embezzlement, right? So we have custodians, and it's a very mature industry. So now the idea is let's bring Tontines back. So we can provide people with lifetime income without that extra overhead that's required of an insurance company that's guaranteeing the income.
But we also know that insurance companies are required to invest conservatively, and so they invest in bonds, government and corporate bonds, mortgages, and other very low yield particularly the last decade, low yield investments.
Right.
And they've been extremely challenged by this. But in a tontine, you wouldn't have those limitations and could invest more, I guess, in equities, couldn't you?
That's right, and that's part of the reason why you can get so much more out of a tontine as well. And so, as I mentioned, that I gave you a specific example of the bond, right, of 20 people investing in a bond. But we can think about it more generically now. Let's redefine what a tontine is. And so a tontine essentially is like any other kind of investment fund. Think of it as maybe a mutual fund or an exchange-traded fund, something like that, right? So it could invest in stocks, it could invest in bonds, it might have a mixture of the two, it could have an asset allocation glide path that changes over time, but fully disclosed to the investors is exactly what the investment strategy is. But with a twist, right? So we all think about investing in these kind of instruments and don't really think twice about it typically. But the twist on a tontine is that when someone who's a shareholder of the tontine passes away, their money then is redistributed to the survivors of the tontine, right? So that's the twist. So in that way, it's similar to an annuity, right? So when you die, the income payments stop. But it provides an additional amount of income above the investment income that's being received by the tontine in the form of these forfeiture distributions that go back to the shareholders.
Which are known in the industry as mortality credits.
Correct.
Right?
That's right.
Which are also used in annuities to provide guaranteed lifetime income.
That's right.
But the problem with annuities for many people is that that income is level, because the insurance company has to maintain these reserves and make these long-term guarantees, which has that cost.
Right. That's right. So there's an important difference between a tontine and an annuity as well. So I described the difference between a tontine and a regular investment, right? The primary difference between a tontine and, say, a fixed life annuity is that the tontine is going to be variable. And it's precisely because there's no guarantee offered here, right? So the idea with the tontine is that the tontine provider will determine what's the effective payout, the fair payout that can be made over the course of the investor's lifetimes. And that's going to be a function of the person's age, right? So if we're different ages and we're both shareholders of a tontine, we can expect a different payout. Right?
Gender as
Based
well,
on,
because women live longer than men, so
that's
there's
correct.
an adjustment there as
Yeah.
well.
So similar to an annuity. But the tontine is essentially fully funded at all times. And this is going to be an important theme to talk about today, I think, in that unlike, say, a pension plan, which, as you know, often severely underfunded, or even like an annuity offered by an insurance company, you hope that the reserves they're fully adequate, but how do we know, right? So there is risk that the insurance company is taking on. With the tontine, basically it's self-adjusting. So it's going to continue to pay out what's the actuarially fair lifetime payout of the tontine. And that can change over time by a couple different factors, right? So if the investments are doing better or worse than expected, then you could expect the payout to be adjusted upward or downward. So there is some variability based on investment return, and that's one reason why you might want to invest in a tontine that has a conservative investment policy. If you want those fluctuations to be very small. If you're not so concerned that the fluctuations are small, you might want to invest more aggressively. Right? But the other thing is that as the actual experience of people die, right? So the tontine provider is going to use mortality tables to say, I expect people of different ages to be dying at a certain rate, so that I'm making the payouts based on that. If people are not dying as fast as we expect, because mortality rates are improving, lifetime is getting longer, then the tontine provider will make an adjustment there as well. So conversely, if people are dying faster than are expected, then the payouts can be higher. So it's continually adjusted.
So you mentioned a moment ago about pension plans and being underfunded. I know that state pension plans in particular are very challenged because states can't print money like the federal government.
Right.
And so some of the life expectancy and investment rate of return assumptions that they're using are not realistic, and plans, even under the best assumptions, are underfunded. So do you see tontines as a potential solution for these public pension plans?
Definitely, yes. We think it's a better mousetrap, really. So a better design for a public pension or even a private pension. So the issue that you describe is that, and unfortunately we see from experience, so many of these public plans are materially and grossly underfunded. As I said with a tontine, it's always fully funded by definition because it's going to make adjustments over time. And so the beneficiaries of the pension, right, will experience some fluctuation in their payouts, but that's a good thing, really, because the alternative is if the pension fund gets more and more underfunded, it'll never catch back up, and that's where we unfortunately see ourselves in many state pension plans right now, local pension plans.
Indeed. So we're going to take a break now for a word from our sponsor. I'm Bill Borton, your host for Live Better Longer. I'll be back in a moment with more with my guest Richard Fullmer from TontineTrust.
Just insurance.
Welcome back to more Live Better Longer. I'm your host Bill Borton here with my guest Richard Fullmer from the TontineTrust. Richard, we've been talking about annuities and tontines and all that, but one of the things we want to make really clear is that tontines really are transparent, aren't they?
That's right, and that's our goal, TontineTrust in particular, to make them as transparent as possible. So as I mentioned, one of the problems that occurred 100 years ago with these types of products was that there was embezzlement going on and some fraudulent practices, and really weren't that transparent. People didn't know what was going on until it was too late, right? So now we've got much better systems to promote transparency, and in fact, with the newest financial technology, that we can provide products that are extremely open and extremely transparent, such that every transaction that happens within the tontine, whether it's an investment that we're making on behalf of all the shareholders, or a payout or money that comes in, can be put on a public ledger.
I.e. the blockchain.
The blockchain
that we keep hearing about.
Right. So it's financial technology is improving, and you can account for a tontine or any kind of investment in a very transparent way, such that every single transaction is publicly available to anyone who wants to look at the ledger. For
those viewers who really maybe have heard of blockchain but don't really know what it is, I heard a very good analogy. Blockchain is to financial transactions what the internet is to information.
Right. That's right.
And so, again, it's this transparent, self-policed, virtually hack-proof way of having everybody having the same information at all times, correct?
That's right. And that's why we think that now is a good time to be launching these kind of products. So if regulators were concerned 100 years ago about these products because there's some bad actors out there, we want to rest assured that everything is going to be very transparent. Everyone's going to get what they were promised. It's very open, and we can do this in a fair way such that everyone gets what they're expecting.
So at the very time when you have this retirement income crisis, which is not just limited to the U.S. by any stretch, it's a worldwide problem, you have technology, blockchain, cryptocurrencies coming into play, and it's kind of like the perfect convergence of the need and the answer.
Right, right.
So speaking of cryptocurrencies, talk about TONS and how this is actually going to operate. Tell me more about TontineTrust.
All right, so TontineTrust, we're a startup company at this point, and
you're based in Gibraltar, right?
In Gibraltar.
That big rock in between Africa and Europe?
That's correct.
Yeah.
So as you say, it's a global problem, right? So why would the company be starting up in any particular location, right? It could be anywhere, because virtually every country has the same
favorable
kind of
banking laws, maybe?
Yeah, and it's a very established place, and they're progressive in terms of cryptocurrency and financial technology regulation.
Well, the climate's there better than Ireland, where Dean McClellan's from, right?
That's right. Dean is the head of TontineTrust,
Yes.
and certainly a big champion of our company. And so he's out there now trying to raise venture capital so that we can become a big successful player in the retirement space.
Yeah, we were talking before the show about TontineTrust having an ICO, or initial coin offering. And anybody
Right.
who's been paying attention to Bitcoin and other cryptocurrencies understands what an ICO is.
That's
So TontineTrust is in the process of lining up an ICO so that they can get investment capital to continue to build the company, correct?
That's right. So you can think of an ICO, for those who aren't familiar with it, as essentially a way, kind of the new way for startup companies to get capital from investors. So the kind of the traditional old-fashioned way was you'd find venture capitalists and make the pitch, and hopefully they would give you dollars or pounds sterling or whatever the currency from the country that you're in. They're trying to raise the money, and they would become shareholders of the company. It's very similar in a way, right? So we're going out and we're making the pitch. Here's what the company is and what we expect to do, and we want to raise capital. And so we're raising capital by a kind of an electronic currency type of thing. And the benefit here is that even though like one person, an investor, say in the US, might be sending dollars, another in the UK might be sending pounds, someone in the European Union will be sending euro, it all gets converted essentially to this electronic currency very seamlessly, right? And that's the benefit of these new currencies that are coming out. So again, it's all secured by this thing called the blockchain. So all of the transactions are public. There can be no shady dealings under the table, right? So everything is above board and public, transparent. And we're raising money, and the money will go into this new cryptocurrency called Tons. And the benefit of it is then that we can use the money, right, to build a business.
Right. And
that as we grow and eventually give money back to the shareholders, we can do so in this currency, and it's immediately exchangeable into any other currency, right? So if I'm in the U.S., I can just exchange it for dollars, or in some other place I exchange it for
Yeah, on your
whatever
website I
currency
saw an example of what looks like a debit card with the TontineTrust logo on it, where you literally could go to an ATM and get dollars out by cashing in your tons, correct?
Yeah, that's right. So even an investor so we can kind of segment, right? So we have people who might be interested in investing in our company, right? The startup phase, right?
Right.
And want to benefit from our future growth. That would be like an accredited investor who's has passed the rules to be able to invest in these kind of companies. And then think about separately, when we do start launching these tontines, there'll be like retirees that are putting portion of their savings into these products.
And then the third constituency would be people who are financial advisors who have clients that are interested in becoming members of Tontine so that they can get the lifetime income.
Right. That's right. And everyone can be using kind of the same methodology. So you mentioned like the thing that looks like a credit card, which essentially that's what it is in a way, or debit card. So how the Tontine would operate, so we would provide information like, here's, you invest so much money, here's what your expected payout is over the rest of your lifetime. And people can decide, do I want to invest my money in this thing or not, right? And if they do, then and say they use the internet, even perhaps a smartphone, they can go to their smartphone and say, every month I'm getting money into my account that I can now spend, and use the smartphone to say, I want to convert this money. You might want to just leave the money in your account, your cash account that's with TontineTrust. Most people, I think, would probably want to say, I'm using this money to fund my living expenses.
Sure.
So I can either just go out to eat and use the card to pay for the dining expense, or if I prefer, I can at any time just convert the money into my bank account. So if I bank in Gibraltar, then I'm going to convert it into that bank. If I bank in the U.S., I convert it to that bank at US.
So we're running out of time, Richard, but the initial coin offering theoretically is going to happen in the first quarter.
Right.
And hopefully, if possible, the initial Tontine offering will be in the third quarter in this country if everything works according to plan, correct?
Yeah.
So
Get
in the
regulators
meantime,
on
if
board.
anybody who wants to learn more wants to find out, they can go to TontineTrust.com.
Correct.
Or if somebody wants to reach you, they can reach you by email, correct? Which
That's
is
right. Richard.Fullmer, Fullmer, at TontineTrust.com.
And Tontine is Tontine,
Correct.
trust.com, right?
Yes.
And then you also write a blog for Tontine Trust.
That's right, and that can be found at blog.TontineTrust.com.
Okay,
And so
great.
really, you'll see a host of information on that website. It explains tontines and what we're doing.
So I think you folks are all going to be hearing a lot more about Tontines, Tontine Trust, and their initial coin offering. I think this is going to end up becoming pretty big news in this country and worldwide, and I'm certainly hopeful because we certainly have a need. Well, I want to thank my guest, Richard Fullmer, for making the trip up here from Baltimore. Fortunately, we had a nice day finally. And so until next Tuesday at 11, I'm your host, Bill Borton, and we'll be back then for more Live Better Longer. Thank you.